Now let's break down our breaking story of the day, and that's the Winklevoss Twins predicting the Bitcoin price action reaching $500,000 per coin. In fact, they made the case for a $500,000 Bitcoin price. But first, I actually want to dive in and break down this story. Winklevoss Twins secretly withdrawing $280 million worth of assets right before their crypto firm collapsed. We're talking about Gemini Earn. Here we go. Cameron and Tyler secretly withdrew more than $280 million held in their crypto company's bank mere months before the firm's collapse left the Twins customers unable to access their deposits. Now, we all know the background of the Winklevoss Twins and the ongoing saga between the digital currency group with their parent company Genesis, which is the owner of the Grayscale Bitcoin Trust, controlled by Barry Silbert. And if you didn't know, the Grayscale Bitcoin Trust controls over 600,000 BTC. Now, some $900 million in Gemini customer deposits were frozen last November 16th. How many of you were affected by that freeze? Let me know. After Genesis was exposed to the meltdown of the disgraced SBF FTX empire and forced to suspend the withdrawals. The feud between the Winklevoss Twins and Silbert is centered around Gemini Earn, an interest-bearing account program that they billed to customers as a way to earn 8% annual interest on their digital currency payments. Now, I like to step in right there. In my humble opinion, the regulators and the SEC are targeting all the crypto yield earning programs. Why? Because it undermines the banking system in the US dollar. If you could earn, hypothetically speaking, between a 5 and 10% yield on your favorite cryptocurrency versus keeping your money in a savings account, market money account, whatever they call them nowadays, what's your return? Practically nothing, right? And you're actually going to lose roughly 20% per year keeping your money in the bank due to inflation. So obviously now it makes sense. Regulators shutting down all the Yearn programs. So Gemini happened to be one of many of those platforms in which they attack. Now, the Twins company Gemini yanked money from Genesis, the lender of the Earn program, on August 9th of last year, according to a review of the internal emails and docs obtained by the Post and interviews with sources familiar with the matter. Now, the lawsuit is currently ongoing. It's virtually the Gemini CEOs, the Winklevoss Twins versus Barry Silbert, who is the owner again of Genesis and the Grayscale Bitcoin Trust. How do you think this is likely to play out, fam? Let me know in the comments below. But now, more importantly, I want to get to the case for a $500,000 Bitcoin price. This was initially published back in August of 2020, 1 year prior to the all-time high of $69,000. Now, in this report, it is very detailed, so I want to just give you the highlights. If you want to read the entire report, check the show notes below the video in the description. So what they do is compare gold and oil, which have both historically been reliable stores of value. Why? Because they're scarce commodities, of course. But we all know that the Federal Reserve, unfortunately, has been manipulating the gold prices along with Wall Street. In fact, JP Morgan Chase got fined over $900 million for doing so. They go on to talk about the problems with the US dollar, including quantitative easing, money printer go Burr, you know what I mean? And all the things that come along with it, in which we know the more money you print, you're devaluing the US dollar. Hence why right now there is a BRICS movement for a de-dollarization of the US dollar. And then, of course, any reason they have to print money, such as COVID, they print till the wheels fall off. If there's another war breaking out, which we're witnessing in real time, another excuse to print more money. And here you can see the M2 money stock supply just going and hitting all-time highs. And this was 3 years ago. It's even way higher, escalating way more. So yeah, just another excuse. Let's print another $3 trillion. Meanwhile, the Fed Reserve's balance sheet looks something like this. And again, this was as of August of 2020. So, I mean, and yeah, the rich get richer. Those who control the money printers are the ones getting rich, and then everyone else is becoming poor due to inflation, which is a way to tax the poor people. Now let's get down to them trying to print them ways out of debt. And then there's obviously always going to be winners and losers. So as they point out here, while COVID has hurled us further down the path towards a soft default, the greater culprit is the US government's permanent and unapologetic policy shift towards a debt monetization model to finance its operations. 100%. This is the problem with the central banking cartels. They go on to talk about the problem with oil. Oil is no longer a reliable store of value because of the supply is not truly as scarce as you think. Just like gold, they can continue to find more. They can invest more into mining gold. And let's not forget that the precious metals market is completely manipulated, as precious metals also undermines the US dollar. So they got to keep it in check and hold it under control. There was even rumors that Elon one day will be able to basically mine gold off of Mars. So that shows you it's not nowhere near as scarce as one leads you to believe. Now let's get to, cryptocurrencies. We know the gold supply, the gold market cap at the time this report was done was roughly $10 trillion. Here is the Bitcoin supply. And as you know, the final Bitcoin will be mined in the year 2140. Now let's compare Bitcoin versus gold. This is a common question I get. Why is Bitcoin so much superior to gold? Let's check it out. Here are the basic characteristics when it comes to scarcity. Bitcoin has a fixed supply at 21 million. Satoshi's wallet has 1.1 million. He hasn't touched a single Satoshi since the inception of Bitcoin. Meanwhile, gold, yeah, it's scarce, but there is no fixed limited supply. Bitcoin is perfect money. It's the first form of money with a finite limited supply. And there's probably millions of Bitcoin lost and gone forever, making it that much more scarce. Next up, the durability. Bitcoin is a software. Gold is a hardware. Facts. And now there's way more benefits to money being a software versus a hardware, including portability. You ever try traveling with 25 pounds of gold bars? You'll get that confiscated quick. You know what I mean? Lightning quick, to say the least. Meanwhile, with Bitcoin, you can remember your private key and you could be walking around with billions of dollars worth of Bitcoin and no one can take it. It has that portability because it's digital. Next up, the divisibility. We could obviously divide gold by a troy ounce, roughly. I don't know what the price is today on the market, probably roughly 1,800 to 2,000 an ounce, whereas a Bitcoin is divisible by 100 million Satoshis. So if you didn't know, you don't have to own a whole Bitcoin to be considered a Bitcoiner and be in the game. You can own a fraction of a Bitcoin. In fact, right now there's roughly 50 million millionaires on planet Earth. There can only ever be 21 million Bitcoin, meaning not even half the millionaires in the world will be able to say, hey, I'm a whole coiner. However, a lot of people will be able to say, I own a fraction of a Bitcoin. So you just need to get in the game because you can purchase literally any amount of Bitcoin, even if it's only $5 worth. Just get in the game and get off the sidelines would be my advice. Anyways, back here, as you can see, when it comes to storage, you can put Bitcoin on a digital wallet or just remember the recovery seed phrase in your head. And then with gold, you got to put it in a safe or vault, which becomes a target. You know what I mean? Now, counterfeit difficulty, difficult for gold, but possible. I read stories of China faking gold and selling it. It's actually a common occurrence. Whereas with Bitcoin, it's virtually impossible. You cannot duplicate Bitcoin. It's physically impossible. And when it comes to adoption, now the Bitcoin market cap is roughly just north of 500 billion at the time of this article. It was at 200 billion, so we more than doubled since then. And the market cap of gold at the time of this article was 9 trillion. And right now we're probably just north of $10 trillion. So as they point out here, as it turns out, Bitcoin is better at being gold than gold. Preach. And not just incrementally, but by an order of magnitude or 10x better. I would be safe to say Bitcoin is superior to gold by a factor of 100x. I truly believe that. Now, it is widely held belief in tech circles that when a product is 10x better, or in this case, as I said, 100x better than its closest substitute, it will escape its competition. Preach. We believe Bitcoin has achieved this. Portability, for example, Bitcoin works like your email, which means it's borderless, never sleeps. Any amount can be sent anywhere in the world over the internet, 24/7, 365. Facts. This makes it not just very portable, but also very censorship resistant. And it's not hard to move Bitcoin in the middle of a pandemic, a war, or a change of government. It's easy to move Bitcoin, full stop. So there you have it. Now for the breakthrough. How was this all made possible prior to the invention of Bitcoin? The idea of decentralized network of money in which unrelated computers around the world could reliably reach agreement with one another was thought to be entirely theoretical. How could strangers agree on who owns what and ensure that people don't spend more than they have when there is a clear incentive to try to cheat the system, just like the fiat money Ponzi scheme? Now, in computer science, the problem of agreement is known as the Benazine generals problem. In the context of money, it's referred to as the double spending problem. And when Satoshi Nakamoto, Bitcoin's synonymous creator, published the Bitcoin white paper in '09, he, she, or they presented the world's first ever solution to this intractable agreement problem. Now, behold the Bitcoin mining algorithm as described. It ensures that a network of computers don't know each other and will, in fact, reach an agreement with each other in a reliable manner. And this agreement or consensus, what today we call the blockchain, would be immutable and verifiable. So historically, such agreement to be entrusted to a central party or ending up concentrating towards one for the first time in history of the world, this is no longer the case. The magnitude of this breakthrough cannot be overstated. It is easily as significant as the invention of the internet itself. Hence why Bitcoin is the internet of money. Now let's discuss some of the network effects. Then we'll be discussing to the moon and why they say we're likely to hit 500 per coin. So with respect to other cryptos, Bitcoin has a significant first mover's advantage, not only because it's the first crypto as we know, but because it was the first one with gold-like store of value properties. And as such, it enjoys tremendous network effect due to its vibrant community of users, developers, miners, exchanges, custodians, etc. Nothing demonstrates this better than the fact that Bitcoin is an open source project that can be copied or forked by anyone in the world and at any moment. And yet, despite being forked many times over the years, which we did with Bitcoin Cash, Bitcoin Satoshi Vision, etc., Bitcoin Gold, it remains the dominant crypto, both in terms of market cap and liquidity. So the race is Bitcoin's to lose, and Bitcoin is the fastest horse in the race. Now to the moon. Inflation, we all know, is coming. It's coming in real time. Money stored in your bank will get run over. Facts. Money invested in assets like real estate or the stock market will keep pace. Money stored in gold or Bitcoin will outrun the scourge, and money stored in Bitcoin will run the fastest, overtaking gold. I do truly believe that. Let me know your thoughts, fam. It's true that gold has a multi-millennia head start and a strong foundation of trust. And as a result, it may be the right short-term to medium-term choice for risk-adverse types. After all, Bitcoin can still get the young and therefore carries both significant technological risks as well as political risks in certain jurisdictions. But nonetheless, we believe that Bitcoin will continue to cannibalize gold. That's right. And that is the story which will play out dramatically over the next decade. The rate of technological adoption is growing exponentially. Software is eating the world, and gold is on the menu. Preach. And you can see just how fast Bitcoin has grown as a technology. Now for the numbers. Bitcoin has already made significant ground on gold, going from white paper to over now $500 billion in market cap in under a decade. Today, the market cap of gold is roughly 9 trillion. So we're right about using gold framework to value Bitcoin, and Bitcoin continues on the path. Then the bull case scenario for Bitcoin is that it is undervalued by a multiple of 45. Said differently, the price of Bitcoin can appreciate 45x from where it is today, which means we can see a price of $500,000 per coin in US dollars. So there you have it. And it doesn't end there. All of this does not factor in the possibility of Bitcoin displacing some portion of the $11.7 trillion of fiat foreign exchange reserves currently held by the governments. So foreshadowing this, at least one publicly traded US corporation had begun holding Bitcoin as a treasury reserve asset. If the central banks start to diversify their foreign fiat holdings, even partially into Bitcoin, say 10%, then 45x gets revised upwards towards 55x or 600,000 USD per Bitcoin and so forth. So there you have it, fam. Let me know if you agree or disagree with the Winklevoss Twins and their case for a $500,000 Bitcoin price. And by what year do you feel Bitcoin will realistically strike $500,000 per coin? Let me know your honest thoughts in the comments right down below.